And European stocks today hit their lowest level in 2 years as traders speculate that Germany is getting ready for Greece to default on its debt. Now there are worries about French institutions and their exposure to debt. Joining us now from London is Simon Maughan. He's the head of sales at MF Global Securities. Simon, welcome back to InBusiness. It seems like the credit markets are showing some real worry, and that we are seeing banks getting increasingly reluctant to lend. What did the banks know that the market doesn't yet?
Well, I'm not entirely sure that they do know. We had a very interesting conversation with a very large European bank at the end of last week that said, while they couldn't identify any specific problems, clearly market movements and volatility were causing them concern, and that they'd therefore reined in their exposure to other banks. And that sounded almost like, well, we don't know, but there must be something going on. And that just perpetuates it. The story then becomes self-fulfilling.
Yeah, it does seem that way. I mean, when Neel Kashkari, we just played a soundbite from him. He was just a guest on our show. You remember him from when he ran TARP. And he says that what he's seeing in Europe right now does, in fact, remind him of 2008. And, in fact, he thinks that institutions, French and German institutions, will see intervention from their home governments. What are you seeing? What is it that you're expecting?
Well, I think two things we're expecting. In Germany, there's clearly a policy decision to be made. Do we wish to continually support peripheral European countries, potentially open-ended, at least for the next decade, or do we simply want to allow them to write down their debt and recapitalize our banking systems? I think the Germans are figuring out pretty quickly it's going to be an awful lot cheaper just to recapitalize their banks and move on without the periphery. In France and one or two of other countries, but France being the epicenter, the credit markets, not so much the banks themselves, but the credit markets are saying your balance sheets are way, way too big. We're not interested in the piecemeal reductions in size that SocGen's announced overnight to try and calm the market. We want dramatic reductions in the size of these businesses, and we're not going to fund you as you're currently configured.
Neel Kashkari was saying he expects actions by home governments, not the ECB, not the EU, but home governments to resemble that in 2008, guaranteeing of deposits, things like that. Are we at that point?
I think we're getting dangerously close to what I call financial protectionism. After the Great Depression, and much talked about from 2008, were the trade wars that exacerbated the downturn and delayed the recovery for a very long time in that decade. Fast forward, the equivalent now may well be financial protectionism. Banks not prepared to lend cross borders, having to keep liquidity tied in. The UK today has announced a ring fence proposal around its retail banking system. All very well, all nice and safe. But what happens if those same UK banks also operate in France, in Germany, in other countries, and those countries say, well, hang on a minute, all the best assets are ring fenced back in the UK. If you want to be operating in France as well, in Germany as well, you're going to have extra capital, extra liquidity. What we could now see is an escalation of regulation aimed deliberately at foreign banks operating in a home country.
So we learned last week that ECB spent like $19 billion buying up debt because you're seeing the yields in Italian and Spanish debt climb again. Are they just throwing good money after bad, so to speak? I mean, is there a point to what they're trying to achieve?
Well, I mean, there's absolutely no way that the ECB can take on Italian debt. It's touch and go whether an expanded EFSF with basically taking over from the ECB would be allowed to handle this or able to handle the Spanish debt. But there's absolutely no way they could take on the Italian debt. And therefore, to a degree, it is something of a token effort, which I think carries very little conviction.
Simon Maughan, thank you for making time for us today, head of sales at MF Global.